Hi, I'm Shein Shanin and this is Making the Call. Corp says it's buying the oleochemicals business of Germany's Kremer for some 90 million euros. That's about 430 million ringgit. Let's look at what the research houses have to say about the deal. First up, CIMB Research, it says the deal is fairly priced. According to its estimations, the deal will enable IOI to expand its oleochemical capacity by 5%. It's positive on the buy in the long term, but near-term earnings won't see much of an impact. It's got a reduced call for IOI with a target price of 3 ringgit 78. Meanwhile, M&A Securities says the deal would further strengthen IOI's business expansion, especially in the specialized downstream oleochemicals manufacturing business, which is not easy to penetrate. It says the group is buying the plants at slightly below book value. And overall, the venture into the EU bodes well for the long-term growth strategy on the group. M&A has a whole call on IOI with a target price of 3 ringgit 60. Public Investment Bank also thinks the deal is fair at 0.99 times PB, considering it will give IOI further potential market share in the EU. But it's cutting its target price for the stock on sum of parts valuation. The research house is slashing its earnings forecast for financial year 16 and 17 between 11 and 15%. And that's after it revised its CPO price forecast recently. It's maintaining a neutral call on IOI with a target price of 4 ringgit and 7 cent, down from 4 ringgit 31. Moving on, SP Setia reported a surge in its third quarter earnings yesterday thanks to its venture in Melbourne, Australia. The builder said net profit soared 153%, while revenue jumped 81%. This pushed core net income for the 9 months ended July 31st to 612 million ringgit. MIDF research says that's already above 100% of consensus full-year estimates. In terms of sales, SP Setia has already hit 64% of its full-year target, so MIDF believes the developer won't have a problem hitting the mark. It's got a buy call in the stock, and it's also upping its target price by 10 cent after assuming higher margins for the SP's Australian projects. Hong Leong Investment Bank Research meanwhile sees SP Setia doing well abroad despite the slow sales from its Battersea project. It raised its financial year 15 earnings target by 20% and financial year 16 by 14% to reflect better margins from the company's projects overseas. The research house has a whole call on the stock with a target price of 3 ringgit 47. Finally, Huang Capital Research says SP Setia's 9 months core earnings may have come in above expectations. But property sales were not as encouraging, especially in the Malaysian market, thanks to softer demand and more stringent lending. Still, with the contribution from the Melbourne project, Huang expects better earnings for this fiscal year. It's upgrading SP Setia to a hold from sell with a higher target price of 3 ringgit 25. And that's it for Making the Call. I'm Shein Shanin. Thanks for watching.